this is my presentation. Before I start, can I have a couple of things? I am a professional fund manager. I have invested money all over the world. So while I will give you a presentation that might have some political comments and probably a lot of cynicism in there, none of it necessarily represents my personal political view. I'm just telling you what I think is going to happen, what I think is going through various politicians' heads. So my name is Ben Ashby. I am the head of fixed income for Radiant Global Advisors, which is the parent company to Henderson Rowe, and I'm the chief investment officer for Henderson Rowe, as many of you know. Keeping with our theme, and I've kind of warned for a couple of years now that I think we're heading to something a bit more like the 1970s, and again, it's becoming more clear, and I've used a whole series of 1970s music titles to go with it. So I couldn't quite find one this time, so I've decided to use ABBA, Accrued Bad Bets, because I'm going to explain why I think a lot of things that have been done in the past are beginning to kind of catch up with us now. And it will also explain how necessarily Trump and the MAGA crowd sees the world, and how Europe is going to also have to deal with some of the things that they miscalculated on. What am I going to do? I'm going to talk about what's going on, what's likely to happen next, what are we going to do about it. Every single one of my titles will be an ABBA hit, some of them a bit more well-known than others, but most of you should know this, knowing me, knowing you, are half of the Brits in the audience. So as usual, I start off with a bit of a behavioural trick. So, pick a number between 1 and 10. Multiply it by 2. Add 8. Divide 2. Subtract your original number. That will give you a letter. Think of a country that starts with that letter. Now, take the second letter of that country and think of an animal. 1, 2, 3. How many people had Danish elephants? There you are, a fair few of you. So it's a bit of a behavioural trick. The maths forces you into giving me the answer 4 every time, and then the moment I push you through there. So you can be primed to give these responses. You can get these things out of humans. Humans will do things with the right inputs. So that's the kind of one of the points I'll be making on my general talk about what's coming through and how to react to it. So, where is the US now, and why are they beginning to behave like they are? So I've taken 3 views. One's Paul Kennedy's, The Rise and Fall of the Great Powers, where he synthesized, the rise of the British Empire and a number of other countries and the eventual collapse. Another one is called Lessons from History, which is by somebody called William Durant. And the third one is by somebody called David Murren, who has joined us here today. Put your hands up, David. He's a good friend of the firm. But it basically talks about the end of cycles, what you tend to see with one of these kind of breakdowns of empire or regimes. And there's 4 kind of key features. So they have too much debt, they have too many dependents on state handouts. In the case of the US, they're pretty much reaching the same level that the Roman Empire had just before its eventual fall, with people depending on welfare payments. Too many military commitments, which is Brits, something we can all relate to, as well as debt. And wealth concentration. The key question here is it's a relative decline or an absolute decline. I would say it's still relative if the US takes action quickly enough. In the mind of the US government, remember, Trump is a businessman. He is clearly not a politician or maybe any great strategician, but if you consider those are the things that they are trying to deal with, then perhaps you'll understand why they're doing what they are and how they see things. First of all, just military commitments. We thought we had a big empire. As you can see there, the US has got something like nearly 750 military bases around the world in nearly 80 countries. So their financial and military commitments are absolutely enormous. And we always focus on NATO, but you've also got to remember, historically, that is a very unusual thing for a country to do. In no way is countries like the Baltic states or even Ukraine in America's national vital interest, yet there they are committing to defence. The problem they have is the orange line is their defence bill, which as you can see keeps drifting upwards, and the blue line is their financing costs. So you're talking about end of empire. Not only is their bills going up, but their ability to actually pay for anything at the moment is really, really, really coming under strain. So again, as Europeans, we focus a lot on the Ukraine situation, but Trump has actually asked the US military to cut its expenditure by 8%. That is a big cut. And it suddenly becomes clear you've got too many bases, most of them are not really in your interest, you've got a huge surge in debt bill, which is only predicted to get larger, and you've got ever-growing military costs. So US isolationism isn't new, it isn't special. Here's two examples, or three in particular, but two from Dr. Seuss, of all people, from the late 1930s, early 40s. And again, there you can see there was a lot of criticism back in the day about America's isolationism basically gave a free ride to fascism in Europe. So again, you're beginning to see that same historical trend. We still think it's more likely to be like the 1970s, but for reasons and some of the charts you'll see in here, there are some unworrying parallels from the 20s to 30s, but US isolationism isn't new. The next problem that you've got as well is US deficit. So it's not just borrowing, it's also just how much they import for the rest of the world. And there's a number of reasons for this, but this is the US trade deficit, which actually is even worse since those figures in there. So again, they're exporting a lot of capital to finance this lifestyle. And again, it's not something that's particularly sustainable. You can't keep doing things like this without basically impoverishing yourself. So again, tariffs, this is from the Grand Old Party, the Republican Party, has again, this is from the 30s, a nice long history of putting tariffs in place when their economy starts to come under strain. So again, it's historically consistent behavior with the United States. But why are they picking on the countries that they are? Well, this is where you get to it. Everybody in red is basically who's selling way more stuff to the United States, and the few countries in blue are the people that the US actually sells more stuff to. It's not a precise set of numbers, but we started off with Canada, quite a large number. Mexico makes a little bit more sense, but the trouble is the number doesn't actually tell you the details. Canada sells you a lot of stuff to the Americans because they sell raw materials, which the Americans process and refine and turn into much higher value items. So putting a tariff on them isn't particularly smart. Mexico might well be a different case, but you can pretty much work out where things are going to come, why China is of such interest to Trump, because as he sees it, this is just money leaving the country. The two that I would like to flag in here, and we hear a lot about Europe, but Taiwan, which I suspect the way that Trump is going to see things over the next few years is it's not a positive ally for the US. In fact, it's just a net drain. And the other one, which is absolutely unbelievable, is Ireland, which apparently exports more goods to the United States than Germany. So that's an awful lot of whiskey. Or it's just the US tech firms and pharmaceutical firms basically booking their revenues through there. There is no way that is going to be allowed to continue. And that's one of the things, the consideration for people that are long tech stocks, which, as you know, we've generally avoided. But you can't have that number and say with a straight face that you genuinely export more goods to the United States. So that's your list. Happy to make the charts available, but you can see that's broadly how he'll put together the hit list, for want of a better term. The other issue you have as well is just real wages have stagnated in the US for the last few years. The number one issue on the US electoral campaign was actually the economy and inflation. And again, just giving you an example about extrajudicial behaviour, we've got a chart of FDR getting into power in the early 30s and all the problems he had to deal with. And a few years later, after he'd shut down the banking system, basically revealed people's personal tax records, basically confiscated gold and packed to the Supreme Court, he too was being treated very much like a dictator. And hence that cartoon there, setting fire to the Constitution of the United States. Obviously, he went on to be seen as one of the better US presidents, but I'm just, again, saying that this behaviour, this extrajudicial behaviour, is not something that's new in the US, though we may well be seeing a much elevated level. Again, there's a lot of stuff to work through from the US, and I just put this chart in here from 28. We've had a roaring stock market, but the US economy actually hasn't been that impressive. We've got a lot of stuff still working its way through from the ultra-low rates, commercial real estate, what they call multifamily, so blocks of flats in the States. But the other thing is they're using an awful lot of money to get the growth they have. If you adjust for that, the true growth figure actually drops to a minus 2.5%. So you can suddenly see, or just over, actually they can't stop spending, otherwise they're going to have a really quite significant recession. I won't spend too long on this, but again, this charming cartoon is from the early 1900s in the States, and it's just talking about excessive immigration. So in this case, they're talking about Italians who apparently were socialists who were going to murder and assassinate everybody, and they're all in the mafia. But again, you're seeing this historical parallel with the US, that when the economy slows down, you start to get, like most countries, who are these people, why are they turning up, and they're just bringing us problems. So again, it's not very pleasant, it's being repeated, but again, it's got a historical precedent. So, what does that mean about what the US is going to do? They're going to attempt a global reordering of the system. That is likely to reduce or produce an awful lot of chaos in one form or another. Strategically, you can see what they're trying to do, but I think we could probably agree that there are perhaps better tactics of doing it. So we're beginning to see this uncertainty come into the market. We're beginning to see tariffs on, tariffs off. America's also talking about, if you want to run a deficit with us, if you want a defense contract with us, pact with us, you are going to have to pay for it. And we are expecting you to basically give us money. So it's bringing it back to, again, more of the old imperial principle. You are in our empire, you are going to benefit from the center, you are going to have to send tribute to the emperor. And we're going to have a general breakdown in a lot of the institutions. I think it's pretty clear the WTO is finished. I suspect the Paris Accord is probably finished. I think there's a reasonable chance that NATO will survive, but as we discussed, not in the structure that is at the moment, possibly without the Americans, but still with the Canadians. I have difficulty seeing the European Union survive in its current format for a whole bunch of reasons. If you want to have independent European defence, it's kind of hard when you've got Viktor Orban in there, who's clearly on Putin's side. You've also got 3 or 4 countries in there that are permanently committed to neutrality, which kind of makes it very hard to deploy any kind of military. You've also got the fact that Trump is almost certainly going to start picking off those countries independently of each other, and again, setting themselves off against each other. So again, not imminent, but I do see some difficulty with that. I also have got the point that Mario Draghi came out and wrote a really interesting opinion piece about 3 weeks ago in the FT, basically saying the single market's been a disaster, it's raised tariffs, it's increased regulation, it's really slowed down Europe. This is all on the back of a massive report he did last year. So when you have one of the high priests of the European Union coming out and making those observations, I think it's highly likely there's a big structural change. Maybe it's still called the European Union, but I think the current format of what it is going to have to change. And on top of this, as you can probably tell from the fantastic artwork that I've been doing, AI continues to improve. And that is a genuinely transformational technology because it's general. It's not just improving production, it's improving graphics, it's improving medical research, and it's just going to get better and better. So for anybody that was here a couple of years ago, we had some early stage, fairly amateur stuff that I'd done, and as you can see, it's generally getting better with each iteration. But there are obviously some positives to this. So again, our base case is something like the 70s, and I'll explain with portfolio what it means for your portfolio allocation. I think inflation will be persistent as supply chains break, as these things sort of change, as they come on shore. That's going to push things up. A lot of Trump's policies are completely contradictory. So he's talking about getting inflation down, and then you start to put tariffs on basically raw goods inputs, which is basically a straight cost through to the US consumer. We cannot see US stocks repeating their gains, and again, this year to date, we've seen your European outperformance. I'm not sure that's going to last, but there will be definitely opportunities outside of the US now, from whether it's rearmament or basically scrapping of green accords, which, as many of you know, I said would probably happen a couple of years ago, and this sort of re-engineering of European society. Europe could actually be a big winner in terms of mega. The only problem they have is they're going into it with huge debt loads, but that doesn't mean there aren't opportunities in there. The French, for all their fabulous contribution to pop music and fashion sense, do have an almost completely independent defense industry, where it is almost completely unreliant on any kind of US inputs. So you could see this reordering, change of capital flows. It's not going to be easy, but it does mean there'll be some opportunities. So what does this mean for your portfolio? Tariffs are a huge variable. If you can tell me what those tariffs are going to look like, how they're going to come in, if they're going to be imposed at all, that will make a big difference on currencies, interest rates, and some of the companies. We are started to diversify your portfolio more. So many of you saw the GQE portfolio change last year. The new version of it that sits in a fund is not only tax efficient, but it has more stocks in it, which means, again, it can trade quicker and it's more diversified across a number of different industries. It's also not connected to any one indices, whether it's US or European. It's just a good ideas thing. We still think it could be a year of two halves. I know the market's been selling off for the last couple of years, but US liquidity, it hasn't been exhausted. They've still got a couple of little piggy banks they can draw down in the first half of the year, but it starts to become difficult in the second half of the year because of all the financing needs. As you know, we've been long-term negative on bonds. We launched the Nebworth Fund. It's very much an income-focused fund, so it's not linking you into the bond market per se. Government bonds across the world did very badly, generally in the 1970s. We're looking for things that will boost your income, have some kind of inflationary link, some kind of, as the economy whether it's the currency or the economy shifts, you'll still get paid in real terms. And we've put a bit more precious metals in there for anybody that's seen in the portfolio, but we haven't been taking a bet on gold. We've actually been basically observing the gold price go up, and we've actually bought gold mining companies. So all we need is the gold price to go nowhere for a year. If it goes up, that's a bonus. But for various reasons, the mining companies tend to take 1 or 2 years before you start to see the cash flows coming through. So we've made that investment, and if you've followed any of these things, which hopefully you don't have to because that's what you pay us for, but you start to see 70-80% year-on-year increases in terms of earnings for these companies. So we put that in there because people are getting worried about the dollar. They're going to be worried about government debt. They're going to be worried about various other things. So again, we're going to see this move back to perhaps a bit more of a gold standard linked world where there's alternative currencies or means of payment. I don't think Bitcoin will be one of them, but history may prove me incorrect. So that's generally what we've been doing for your portfolio. That's how we've kind of got to that conclusion. Thank you very much for your time.